So on Friday, we talked about technical analysis. We talked about technical analysis. Yeah, okay. We talked about technical analysis on Friday. We talked about trends, talked about retracement, we talked about continuation. Yeah, and we also talk about reversal. Okay, so we talk about trend, continuation, reversals. We talk about support and resistance. Am I correct? Yeah, we talked about support and resistance. So this evening, we are going to talk about candlesticks pattern. And I know that many people need to have a good knowledge and good idea about what candlesticks pattern is, right? Okay, so candlestick chart, I'm going to start by what they are believed to be. Candlestick charts are believed to be developed in the 18th century by Monisa Homer. So candlestick chart or candlestick pattern have been in existence since the 18th century by Monisa Homer. Before we continue, I'd like to say that for the video recordings of these sessions, you can join our YouTube classes, our YouTube page. We upload them there so that you can also be learning and be watching. If you miss any classes, you can also be watching them over and over again. Okay, over and over again. Now, candlestick charts are believed to have been developed in the 18th century by Munisa Homa, which is a Japanese rice trader in the future market, right? So it means that trading has been in existence since the 18th century. And Mr. Munisa Homa was one of the richest man in Japan then, right? He was one of the richest man in Japan. And he has access to, rice futures and all that. So he classified candlesticks pattern into two, which is the bullish and what? The bearish, okay? The bullish and the what? The bearish. Now, what is the bullish and what is also the bearish candlesticks? Okay, what is bullish and what is also the bearish candlesticks? Now, these names, these candlesticks are gotten from the attacking nature of these animals. They're gotten from the attacking nature of these animals. For example, let's say bullish candle is gotten from the attacking nature of a bull. So when we're talking about a bull, if a bull wants to attack, it takes you from the bottom and throw the person up with his horn, right? So meaning that this type of candle, they usually start from the bottom and closes at the top. So let's say, for example, a candle closes at 5 naira and a candle opens at 5 naira and closes at 10 naira. Should we say the candle is going up or coming down? We can say the candle is what? Going up. So it means that once a candle opens at 5 naira, which is the open price of the candle is 5 naira, and the candle closes as 20 naira, we can assume that this type of candlestick is what is moving up, which means it's a bullish candle, right? And if a bear wants to attack, a bear prefers to attack its prey by pinning them down, right? They pin them down and start tearing the prey. So we can say that candlesticks, like a bearish candle, opens at the top, right? Opens at the top and closes below. Okay, so let's say where the candle opens at 10 naira or 20 naira, and that's the open price of a candle, and closes at 5 naira. Which means that this type of candle have done what? They have dropped, right? So when the market is going up, or probably an uptrend, we see more of a bullish candle. So when you see a candle that opens low and closes high, it is a bullish candle. So we anticipate that the price is going up, right? So we buy. And when we have a bearish candle, that is, we are saying that the market opens high and closes lower, okay? So here also, by definition, we also have something they call body and wick. We are going to be talking about that as we move ahead. Now, what is a candlestick? What is a candlestick? A candlestick, can you see my screen? Can you see my screen?
Yes.
Okay. Okay. So what is a candlestick? A candlestick is a graphical representation of global market activities controlled by forces of supply and demand. So what does this mean? It means that a candlesticks, it's just a graphical representation of what is happening, telling you that, oh, at this particular time frame, the buyers are very, very strong in the market. At this particular time frame, the sellers are very, very strong in the market. Okay. So, but when we say market is going up, probably in 1 hour. So every 1 hour candlesticks you are seeing is telling you the presence or the strength between the buyers and the what and the sellers. So when we have a bullish candle, that is candles that open price at low, let's say, and closes are very high. So which means that it's telling you that at that particular 1 hour, the forces of demand is higher. That is, there are more buyers than sellers. Okay. Now it's basically the graphical representation of algorithm data of the market. It is used to predict the future direction of what? Future direction of price movement. So what it means is that candlesticks helps you to predict the future direction of price. It helps us to predict the future direction of price. Okay. Now there are two things that are very important in the candle, which I will tell you. The first one is the body. Now, what is the body? The body is the distance between the open and close price. Okay. So the distance between the open price and the close price is called the what? The body. Okay. Then the high and the low depicts the wicks. We can call them rejection. We can call them pressures from buyers or sellers. So what do I mean? Like here, when you look at this candle, we see this is what? Open price. This is what? Close price. Meaning that price opens at, let's say, $5 and closes at what? $20. So the gap between here and here, this open and close is filled and it's called the what? The body. Okay. So the gap between the open price and the close price is called the body. Why this thin line you are seeing, they are called shadow. Some people call them wicks. Some people call them rejection. Okay. They are telling you the pressures between buyers and what? And sellers. Do we understand that? Okay, so let's go to the next slide. Okay, so what is the candlesticks, the historical footprint? So Japanese candlestick charting and technique is one of the most effective ways to read price movements in financial market. The methodology is so-called because of the similarity to a candle and has been developed over the centuries in Asia, Eastern Asia. It was originally used in Japan during the Edo period of 1603 to the 1868 to monitor and forecast price movement of the country's most prized commodity, which is rice, which was mostly traded in Dojima Rice Exchange near the historical capital of Osaka. Widely based on military tactics of time, Japanese candlesticks have provided traders with edge long before bar and point and figure charts, while evolving into a compelling strategy for today's vast volatile market. So this is just telling us that in Eastern Asia, right, from 16th century to 1868, they'll be using the candlesticks. Okay, so this is just telling you the brief history of the candlesticks. Now, why do we need to use these candlesticks? Just for three reasons. Number one is for visual dynamics. Yes, so it's more clear. You'll be able to see the price at which the buyers are or the sellers are using. Okay, we have precision timing, so we use every time frame determines every bar for every candlestick. Then you enhance technical analysis. With the help of candlesticks, you'll be able to know when to buy and when to what, when to sell. Okay, you'll be able to know with using some technical indicators or software. You'll be able to see the highs, the lows, the pressures between the buyers and the pressure between the what, between the sellers. So that is just the candlestick chart. But there are four prices in the candlesticks. There are four prices. The first one is the high. Okay, so we have it here. Every candlesticks within a particular time frame must present you a high, right? So what is the high? The high is the highest point which the candle has gotten to before the end of that time frame. So meaning if you're using 5 minutes chart, it means the candle has 5 minutes to open, to close, to tell you the high, and also show you the what? The low. Okay, are we together? Okay, then secondly, if it's 1 hour, the same thing. Okay, if it's 30 minutes, the same thing. If it's daily, it will take 1 day. If it's weekly, how long will it take for a weekly candle to open and close? Can someone tell me, if you understand, how long will it take for a candle to open and close? Hello? So how long will it take for a candle to open and close?
A
For
week, a week.
Yes, so it takes a week, which is 5 days for a candle to open and close. So the highest price, which the price has gotten to, then coming down is called the high. Okay. Then we have, after the high, we have the low. So what is the low? The low is the lowest price which the candle has gotten to before the close of the particular session. Then we have the open price, and we also have the what? The closing price. Okay, so we have the high, we have the low, the open price, we also have the what? The closing price. So the open price, this is the initial price. That's the first price the market gets into before closing. Okay, then we have the close, also the same thing. Okay, also the same thing and all that. So these are the 4 prices that the market has to get to before closing. Okay, before closing. So every session, every time frame, this 4 price must show. It must tell you the open, the low, the close, and the high. Okay, so the open and close indicates the what? The body. So don't forget, the open and close shows you the what? The body, while the high and the low tells you the pressures between the buyers and the what? And the sellers. Okay, so this just candlestick construction. Because like I said, thin line at the top is called the high, and the thin line below is called the low, or the lower wick, or the lower what? Lower shadow. Okay. Now, what are the candlestick formation that we need to know? So these are some of the candlestick formation that we need to know. I'll be explaining them one after the other. Now, candlestick pattern indicates an opportunity within a market, especially when they are formed at support and resistance area. So taking us back to support and resistance, who can tell me what you can tell me the meaning, the meaning of support and resistance, right? Where is a support area and where can we classify as a resistance area? Can anyone tell me? Can anyone tell me where we can classify as a support area and where we can classify as a resistance area?
The resistance area is at the upper end of the graph where the price will retrace to come back downward. And the opposite of it is the support, which happens which is located at the lower end of the charts, where we have the bearish candles, and at that point, the price that have been going down will now have to retrace back to go upward.
Okay. Thank you very much. The person talking, what's the name?
Ajayi.
Okay, so eh?
Gabriel.
Okay.
Hello?
Okay. Now, okay. So Kate said support is at high swing, while the resistance is at the low swing. No, I think you made a mistake. Resistance is at the high swing. Okay. So we can say resistance is a place where market gets to and start dropping. So we can call it a seller's area. Okay. While support is a place where market gets to and start buying. So we can call it a what? A buyer zone, right? So resistance, where price gets to in the chart and start dropping, which is a resistance, that is the presence of sellers. Then we can call it seller zone. Then support, place where price gets to and start going up, and start buying. I call it a what? Buyers. Now, so some provide insight into balance between buying and selling pressures, while others identify continuations, patterns, or market indecision. So what this means is that support and resistance provide insights, telling you where there is presence of what? Buyers and where there is presence of what? Sellers, which means that we all need candlestick pattern to know when to buy and when to what? When to sell. The truth is, as a trader, we need to understand what these candlesticks are telling us. We need to understand what these candlesticks are telling us. We need to understand when to buy and when to what? When to sell. when to buy, and when to what, and when to sell. Okay, so when to buy, when to sell, these are the essence, and these are the result of what, candlesticks. Okay, and every trader should understand what these candlesticks mean, and that is why we are teaching us, we are putting us through on how to understand these basic candlesticks formations. Okay, the first one is what, the first one is the hammer. Okay, now how do you identify a hammer? And I'm going to be explaining from here. Now, a hammer in a downtrend, so let's say market is coming down. Now it appears that when market got to a particular point, we now have pressures from the bottom. Don't forget what I said. The first thing that this hammer looks like a normal hammer that we are using. So let's, in the market is coming down, it will get to a point when the market is chopping, we'll be having pressures of sellers, big bearish candle. But to get to a point, the body of the candle will be very small due to the fact that these buyers have pushed the market up. Don't forget what I said about this week, these shadows. I said this is also called rejection, or it is also called a wick. That's WICK. It's also then it gets to 2 naira. From the 2 naira, buyers comes into the market and pushed it back to 12 naira. You know, this means that if there are presence of what, of buyers, so they usually have a longer wick. Okay, a longer wick at the bottom, at the low. Okay, and the body is usually small. They usually have a longer wick at the bottom, and the body is usually small. So this is telling you that there are presence of buyers in this very market, and they are usually seen in a support zone. Okay, they are usually seen in support zone. They don't matter the color, but what matters is that the sellers were coming in. Okay, the sellers were dropping. The sellers were coming in. They dropped the market. Let's say this is about this market is about 10 pips. Then market, before the close of that particular time frame, buyers started driving the market up, forming this long wick. So this means there are presence of buyers in this very market. So what are we going to do in this session? When you see this type of candle, the next thing is we'll wait for the next candle before we take our buy, provided that the trend is on what, is an uptrend. So we are going to do the practical aspect probably after this class. Okay, now the second type of candlesticks I want to talk about is the hammer. Okay, inverted hammer. Now this inverted hammer, this shows us the pressures of sellers in a particular time frame, but they could not push the market down to a particular certain level. Okay, so let's say, for example, this level is the low and this level is around 20. Let's say this is $20, right? And sellers are mounting pressures in sellers territory, but buyers are still holding their base towards to this $20. So it's telling you that the first features you need to see is the lines. The wick has to be long at the top. So this wick is like you are putting the hammer upside down, and the body also is very small. So when you see this type of candlesticks, just expect the presence of what? Buyers, okay? And this usually occurs in a support area. So when you see this type of candlesticks in a support area and you see the next candlestick coming on board, then you can take your what? You can take your buy entry. Okay? You can take your buy entry. So it's an upside down version of the hammer formed in a downtrend. It shows presence, buyers' presence in the seller's territory, creating panic for the sellers. A good bullish candle, a bullish belly candle following the inverted hammer will be strong enough to drive the market price up, serving as a what? Confirmation candle. So what this means, we're going to talk about it, is telling you that when you see candlesticks with a longer wick, the next candlestick has to be bullish, and provided that the trend is still is in a support, the trend is in an uptrend, right? So and we have a support zone, that is when you can take your what? You can take your entry. The next one is the hanging man. But what I want you to understand about this candlesticks pattern is they usually have a tiny wick, a longer wick, but their body is usually small. Don't forget what I said the body is. The body is the distance between the what? The open price and what? The closing price. Okay. So they usually have a long, tiny wicks, a long, tiny shadow. But when you find them at resistance, when you see this armor suspending at the resistance point, then it is called a what? Hanging man. Okay, it is called a hanging man. So when you see a hanging man, market drops, and the next candle you see is a bearish candle, you know that the market is about to what? It's about to change direction. So a hanging man, when you see this type of hammer, or we see this type of candlesticks in a resistance, it's called a what? Hanging man. But when you see them in a support, it's called a what? It's called a hammer. It's just telling you the presence of buyers in the what? Presence of sellers in a buyer's market. Okay. And see them, you understand that. Now, this argument usually occurs at the top. Okay. I'm going to summarize what this type of candles are so that we can understand it before when you see them. But most especially, they tell you that the market is about to change direction. Okay, it's telling you that, hey, truly at this resistance, there are presence of what? Sellers in this very market. Okay, I tell you that there are presence of sellers in this very market. So when you see this type of candlestick at the resistance point, it is called a what? It is called a hanging man. Also, we have a shooting star. The shooting star, you can see that this shooting star also looks like an inverted hammer. But what differentiates them is the what? Is the position. When this one, when this type of candle shows in a support area, it becomes a what? Inverted hammer. But when you see it at a resistance, it becomes a what? Shooting star. So when you see this type of candlestick formation, a longer upper wick and a smaller body, you know that the next candle is what is, and when you see a full bearish candle, just have to at the back of your mind that it is what we are selling. And this candle shows you that there are presence of sellers because at this high, it is due to the presence of what? Sellers. So seller push the market down, right? They push the market down from this particular price. Okay, they push the market down from that particular price. Okay, so when we have that, we understand that this is also called a what? A shooting star. Okay, so how do you trade a shooting star? Like this, for example, when we have this type of candlesticks and the next candle that forms is an engulfing candle or a very candle that has a smaller wicks but a bigger body, then we know that there are presence of sellers in this very market. Okay, it's telling you that yes, there are presence of sellers in this what? In this very, very market. So we need to also trade with a lot of cautions. Okay. Okay, so that is how to identify a shooting star. I'm going to show us on our chart. Then another set of candle is the engulfing candles. These engulfing candles, they usually have a bigger body. What did I mean by body? Like I said earlier, I said the body is the difference or the distance between the open price and the what? And the closing price. Okay. That's the distance between the what? The open price and the what? The closing price. Between the opening price and the closing and the what? And the closing price. Okay. So that is what the engulfing candle is. So how do you identify this engulfing candle? It takes two candlesticks formation. Thanks to candlestick formation. The first one, when you see this first one being a bearish candle, then the next candle that comes up is swallow up, that is twice higher than the previous candle. That means the open price is higher than the closing price, and this new candle closes above this the high of the previous candle. So we call it the what? Engulfing candles. Okay, we call it an engulfing candle, meaning that it engulfs, it closes higher than the previous high of the previous candle. So when you see this in the support zone, it's telling you that yes, there are presence of buyers in this very market. Then we can think of what? We can think of buying. Okay, there are presence of buyers in that very market, and we can think of buying. Okay, we can think of buying. So that is what the bullish engulfing candle means. Okay, now this is also an example on a chart. I'm going to show you on a chart what how to identify a bullish engulfing candle so that we can understand it while trading. Now we can see I said it is two different candle formations. The first one is bearish The second one has to be what? The bullish, which is the new one has to be very bullish, meaning that this new one has to swallow up the first one, which is the size of this previous one has to be the new one, the price of the new one has to be twice the size of the previous one. Okay, the size of the new one has to be twice the size of the what of the previous one. Okay, so that is the what the bullish engulfing candle. So it indicates the significant buying force in the seller's territory. It indicates what significant buying force in the seller's territory. It's an indication that seller has lost control of the market at that particular time. So let's say the market is moving, we are in an uptrend like this, and probably we are in an uptrend like this, and price is moving forward, and price is retracing. You know, as price is retracing, these are bearish candles, right? And the next candle that forms is an engulfing candle in a very, very strong resistance area. Once you see this type of formation, it's telling that buyers will continue moving in the market. Then you can enter your what? Your buy without looking back. Okay, then you can enter your buys without looking back. So this is also an example of a bullish engulfing candle. So when we have bullish, we also have what? Bearish engulfing candle. So this is mostly found at a resistance. Bearish candle is mostly found at a what? Resistance. That is sellers areas. Just telling you that there is no argument. Sellers just come into the market, take out the sellers, at sellers zone, and they can enter into the very market. So just like I said, it's just two different candle formations when the present candle is twice the previous candle. That is what the bearish engulfing candle means. Okay. Now we also have the piercing pattern. This candle is not literally, this type of candlestick pattern is not literally common. Okay, it's not always common. It's not common in the market. Okay, so most times it's just price closing 45 halfway the previous candle. Okay, it closes when you see a candlestick that closes the lower low and closes more than half the previous candle. It's called the piercing pattern. So all these candlestick pattern, we are going to look for them on our chart, and I'm going to explain it for us before I run today's class up. Okay, so another candle is doji candle. This doji candle, they usually have a smaller body or no body. Okay, they usually have a small body or zero body, which means that the distance between the open price and the closing price is always small. Okay, the distance between the open price and the closing price is always what? Is always very, 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 very small or equal. So it's telling you that at that point, there's pressure from buyers and also pressure from what? Sellers, which means at that point, there is no buyers that is winning. Market is at equilibrium. There is a strong, tight force in that what market. So if a doji appears after an uptrend, and especially it follows a long white body candle, it represents indecision at a significant high and at a time when bulls should still be very decisive. It can also be read as a sign that supply and demand have reached equilibrium. Either way, it's a sign of warning that uptrend is ending. And if it appears on a long decline, it's telling you that a downtrend is ending. So this means that when we have a long bullish candle and this candle appears in a resistance point, it's telling you that yes, there are pressures of buyers and sellers, and the buyers are what? I mean, there is nobody winning, which means that the buyers the presence of the buyers are what? Are weakening. Okay, they are weakening. Okay, so that is just that. And these are the types of dojis that we have. We have four types of doji. We have the normal doji, we have the long leg doji, we have the dragonfly doji, we have the gravestone doji. So this just indicates the presence. I mean, that there is a fierce battle. There's market is still at equilibrium. There is no buyers. I mean, no sellers. Both of them are still at loggerheads. Okay, both of them are still at loggerheads. They are still battling on who to take over. But whatever it is, just know that the market, the trend, if market is on a very long time, I mean, it's on a very high resistance, it's telling you that the uptrend is about to end. And if the market is on a very strong support, it's telling you that the downtrend is about to end. Okay, so let's continue. If you are enjoying this class, I want you to send a fire emoji. If you are understanding what I'm talking about, can you drop a fire emoji? Let me see. because after this, we'll be going to the chart. We'll get further explanations of them. Okay. Okay, so if you are here, can you drop a fire emoji? Okay, nice one, Mr. Ebitini, Victor Daniel. Okay, Emmanuel Abel, that's good. We need more. So if you're enjoying this class, I want to see a fire emoji. Lami, okay. More. Keep it coming. Keep it coming. Keep the fire emoji coming and all that. Okay, so we also have another type of candlesticks pattern, which is called the three inside up. Basically, I just want us to understand that this type of candlesticks, they are formed, okay? They are formed to tell you that there are presence of buyers and presence of sellers in this market, okay? So once price gets to a support zone and you see this type of candlesticks pattern, this pattern takes three types to form, okay? Yeah, keep it coming, keep it coming. It takes three formations to form. So they usually occur when there is a long bearish candle. They usually occur when there's a long, let's say, engulfing candle, and market is trying to build up to cover up that engulfing candle. So it takes three setup to happen. The first one will be lower, let's say lower. First one will be a bearish candle. The second will be a bullish candle, which will close close to 50%, while the third candle must close above the bullish engulfing candles. So when you see this formation, just know that there are buyers coming into the market. So the indication is for you to what? It's for you to buy. Then we also have three inside down. This usually happens in a resistance point. It usually happens in a resistance zone, and it's still the same formation. When the first candle is a bullish engulfing candle, the second has to close 50% below the first engulfing candle, and the last one will close below the engulfing candle, just like what we have here. So sort of what we have there. Okay, so we also have the morning stars and the evening stars. So this comprises of three. The first one, the engulfing candle, which means that the body of the candle has to be higher. Then the second is has to be a doji candle, while the third candle has to be a bearish candle. So for an evening star, it usually happen at resistance. For this type of market, you take your entry at the close of the last candle. Please don't forget, every candlestick is represented in this time frame, and you need to pick your entry at the close of that particular candle. So we also have a tweezer. This shows tweezer top is usually at the resistance point. It's telling you that market is at equilibrium at the top, and when the bullish candle and the bearish candle are of the same size. So when they're of the same size, it's a very, very strong resistance, telling you that yes, they are matching each other and market is tends towards to reverse. So we call it tweezer top. We also have the word tweezer bottom and another. We have the spinning top. The spinning top is also related to the doji, and it's when the candlesticks did not close equally, but the gap is not that much. Okay, the gap is not that much. Then we have the arami. Now the arami consists of two candles. The first one being a large, and the second one small candle, which is going to be contained inside the body of the big candle. So these candlesticks, we have two types. We have the bullish harami, we have the bearish harami. When you have this, some people call it pregnant child, pregnant baby or something, but it is an harami. This is telling you that the presence of buyers are coming in. So we have a long trend. We now have a range inside this higher candle. Then we need a breakout between the buyers and the sellers. Okay, so that is that. I'm going to take us to the chart and explain what and identify this type of candles so that we can explain when we see them, we can have a better understanding about them. So I'm going to share my screen now to our chart so that we can have a better understanding about them. Okay, then we can now ask your questions. Can you all see my chart? Can you all see my chart?
Yes.
Okay, that's great. So I will increase it very well so that we can understand what we mean. Okay. Now, every candlestick, like I said, it usually happen in a support or resistance zone. Okay. It usually happen in a support or resistance zone. And how do we identify support and resistance? Where we have presence of buyers and market comes back again to those levels. Now, when we have this place, I'm going to start from here. Let's take from here because we have a lot of candlestick formations that are happening here. So this is for a 1 hour time frame on Euro USD. Now look at this candle, 1 hour time frame on Euro USD. You can see 1 hour time frame on Euro USD. So which means that every candle has to open and close within 1 hour. The highs, the lows, everything has to show within 1 hour. So each candle takes every 1 hour like this. For example, from this high, so we have, this is the high, this is the low, then we have the opening price, and we have the what? The closing price. So these candlesticks, they will all occur within what? 1 hour. So once the market opens by 10 today, another candle opens. Okay, another candle opens after the 1 hour. Okay, so this is called the what? What is this place called? Hello? What is this place called?
Week,
Closing price.
week.
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 Yes, it's called the week. Yes, thank you very much. It's called the weeks. So this is the high. Okay, this is the what? This is the what? The lower wick. Then this candle opens here, right? This candle opens here. So this is an open price, and this is the what? Closing price. Okay, so that is why it is a bearish candle. But look at this type of candle. This is the low, this is the open price, and this is the what? Closing price. Now let me show you something. For you to identify this candle very well, you'll see something here. Most of the time, once prices are always equal. Now look at this. This is where this candle ends. You can see this is where this one opens. Can you see? This is end here. It opens immediately here. So this is the open price. This is the what? Closing price. Also, once price touches this place, so look at this candle. Look, I see they are equal. So this is the opening price. This is the what? Closing price. Okay, so immediately this one closes, this opens. So this is the what? Opening price. This is the what? Closing price. So they are always equal. Like this is now, this is the what? Closing price. Immediately this close, the next place that opens is the opening price. Okay, of another 1 hour. So this is the opening price. This is the closing price. This is the opening price. This is what? Closing price. When you see them equal, this is closing price. This is opening price. So we can say the closing price of the previous candle is always equal to the opening price of the new candle. Okay? Okay? Can you understand? Do you get that what I said? Do you get that?
Yes.
Do you get that?
Yes.
Yes, so the closing price of a previous candle is equal to the opening price of the new candle. Like this now, the new candle will come out here. Okay? The new candle will come out what? Here. So it could either go up or probably start at what? Coming down. So it will do the two. Okay, either of the two. It will either go up or what? Or come down. So don't forget that once a candle closes like this, so let's say this is the closing candle, immediately one is 1 o'clock, another candle opens here. So this will become the what? The opening what? The opening price. So don't forget that. So we'll be looking at some candlestick formation at support and resistance area before we round up this class. Now, I'm going to reduce this. Now we can see from here. So we can see from here that this is a what? This is a support area because we've had presence of buyers in this market. So once you have a support area, what type of candlestick pattern is this? This is a what? This is an engulfing candle because we have a bearish candle and the bullish candle came and what is higher than the previous candle. So this is a what? Bullish what? What is this? Bullish what? Engulfing candle.
Engulfing.
Yeah, so that's bullish engulfing candle happening in what? Support area. So the next thing you do, you take your buy entry and you what? You buy because the market is in the what? Uptrend. Also, we have this here. What can tell me what type of candle is this? What type of candle is this?
Bullish engulfing.
Bullish engulfing? No, this is not a bullish engulfing. This is a hammer. Okay, we can say this is a what? Hammer because the wick is longer than the what? Than the body. So it means that sellers were coming down to this market, but buyers started pushing it up. Okay, so this is a hammer. We call this a hammer. How about this? What is this? This candle is what?
Inverted hammer.
Inverted hammer, but it's not hammer. This is an inverted hammer. It is found at a what? At a resistance. So once it's found at the resistance, it becomes a shooting star. Don't forget, look at this one. This is found at a what? support. So your support is your low, resistance is your what? High. So this is a what? Shooting star. Okay, this is a what? Shooting star. Okay, because the pressure is coming from the what? Is coming from the top. Okay, that's a shooting star. It means that buyers were pushing. You can see buyers were pushing the market from here and got to this price. What happened? Sellers came in and what? Pushes the market down. And you can see that this candle confirms it that yes, they are sellers in this very market. And you can see how market moved down to the nearest support, right? So when you see candlestick formations in both support and resistance area, then you have you understand what is going on in the market. How about this? What is this? This is an example of what evening star, right? So, but what type of candlestick is this? This one. What type of candlestick is this? What type of candlestick is this? Yeah, we can call it
Engulfing
doji. Not engulfing, please. We can call it doji or spinning top. Okay, we can call it doji or what? Or spinning top, because the gap between the high and the low is not much, but the wicks are very long. Okay, the wicks, they have a longer wick. So this is an example of a spinning top, and this is also another example of a what? A doji or a spinning top. Okay, so we can call it doji or a what? Spinning top. And look at this. Like I said, this also is an example of an evening star. Like I said, the evening star happens in a resistance point. We have a bullish engulfing, we have a star here, and we have a what? Bearish engulfing coming into the market. So if you place your sell here, right, put your stop loss above this market, then you target the next support, which is here, right? But I'm not teaching us how to pick a trade. I'm only teaching us how to interpret this candlesticks pattern. No. Yes, it's only bearish candle that can be called a shooting star. Okay, the only bearish candle that can be called a shooting star. That is when an hammer, when a candle forms, when it has a long upper wick at the resistance. So if the rejection is from the top, so you can call it a what? A shooting star. Okay, we can call it a shooting star. Okay, so I'll be showing us some examples to see if we understand it better. How about this? Who can tell me what about this? This is what? This is an example of what? What kind of
That's a hammer.
That's a hammer, correct? Because this is a support. We have sellers and buyers, so this is a support. Then we have a hammer here telling you that market reject this zone and we need to what? We need to buy. Okay, telling you that market reject this zone, we need to buy. So this is a support area. It's called a hammer. And also look at another hammer here. Can you see? This is another what? That's another hammer at that point. Okay, that's another hammer at that point. So we are having bullish sentiment, and that is why you can see this long buy. Okay, we can see that long buy in that area. Okay, so also let's look at more before we round up. How about this? Who can tell me what kind of candlestick is this? Look, what kind of candlestick is this?
Inverted hammer.
No, it looks like inverted hammer, but it's at the resistance zone. Please don't forget. Once you see it at the high, shooting star, exactly. The shooting star. So this is the what? Shooting star. Now, if the shooting star, please, who is this? If this shooting star is confirmed with a long bearish candle, then we have presence of sellers coming into this market. Okay, if that shooting star is confirmed with a long bearish candle, we have presence of sellers coming. But what did it do? It is also tackled by this type of candle, which is also a what? A hammer. So telling you that buyers did not accept this. They have to counter it and markets will stop here, right? And we've not gotten any confirmation. So the next confirmation that will make us sell is when we have a bearish short engulfing candles on that there are presence of sellers in this market, then we can now think of what? So this is what bearish candle. Now let's why, because the bias, the presence of the distance between the opening price and the closing price is what is more. So what kind of candle is this? This is a what? Bullish engulfing. How about this? What is this? Bullish engulfing. How about here? What kind is this?
Bearish
This type of
engulfing.
candle. Yes, bearish engulfing. Bearish engulfing. Okay. How about this? How about this?
Spinning top.
No, spinning top.
That's an hammer.
That's a hammer.
This is a hammer, correct. This is a hammer. Spinning top, we have another
Bearish
wick at the top. So this is a hammer. Okay. So how do you trade an hammer? When you see bullish confirmation, a bullish engulfing follows them, then you can trade it like this now. This is an example. Look at it. This is an example. You know, this is a support area. This is a hammer engulfing. Then you can enter your buy here. Continuation for bullish sentiment. Also, the same thing. This is hammer and continuation. Put your stop loss below. Then you continue these pairs. Okay, so we have a whole lot of them. You can see this is a tweezer bottom because it's found at the support level and continuations.
So you didn't explain long candlesticks, this longer bodies candlestick.
Yeah?
You didn't explain them.
What did you say?
Those candles with a longer body, the candles with a longer body, you didn't explain them.
I said they are engulfing. I did. They are engulfings. They show confirmation. They
No,
show
this
strength.
all this longer one.
This ones. This one.
Exactly.
I said they are engulfing. I said any
Yes, sir.
candle that they are opening.
Nah. I thought it's they called Maribozu or so, something like that.
We didn't include Maribozu into that, but yeah, also another examples of candlesticks, but they are also engulfing. Okay, when the distance between the opening price and the closing price is much, we call them engulfing. Maribozu, I think Maribozu is the Japanese interpretation of it. Okay, they are still the same thing. They do the same thing. Okay, engulfing candles with longer body, they are called engulfing candles. Okay, they are classified as engulfing candles. Okay, so I'll entertain a few questions, then we round up for tonight. Okay, so any questions so far? Do we have any questions? Hello?
Yes,
Do you have
I
any
have
questions?
I have a question. Good evening, everyone.
Okay, good evening.
How can we get this recorded version?
Hello? Hello?
Can you hear me?
I can't hear you. That's why I'm saying hello. I can't hear you, Mary. You seems muted. Who is also there again?
Hello, ma.
Please, you are far from your mouth.
I think I'll need more clarification on the shooting star, please.
Oh, okay. Now let me show you. Shooting star, the easiest way to identify them, when you have like the body, now look at it. You know, this is an hammer, right? Now let me teach you, show you. You know, this is an hammer. This is how the hammer looks, right? Right? So this is how the hammer looks, right? Now, when you have this one, right, coming here at the high, at the resistance, it's called what? It's called the shooting star.
Okay.
Okay. But when you have this inverted hammer, you know this is an inverted hammer. It's an
Yeah.
inverted hammer when it is at the support zone. But when it's at the resistance, it's called the what? Shooting star. Do you understand this now? Where are your
Yeah.
resistance? Your high. These are resistance. These are resistance. These are resistance, right? These are resistance. So when you see them at the resistance zone, they are called shooting star. Have I been able to answer your question? Yes.
Yes. Yeah.
Okay, thank you. The recorded version will be uploaded on our YouTube page at PE Prime Africa. Just try and go to our YouTube, type PE Prime Africa, you'll see it there. Okay, PE Prime Africa. Okay,
do you mean Pew Prime Africa?
Yes, PE Prime Africa on YouTube. Okay. Okay, in case there are no questions, thank you very much for your time. Please, I have a disclaimer. We know that some miscreants they've been private chatting people in the group, telling them PU Prime has an offer for $500. Please don't fall for it. It's a scam. And any link that is not posted by a PU Prime admin, okay? And no PU Prime admin has a foreign number. We all have Nigerian number, okay? Once anybody send you a message, go to the group. Once you see that they are not an admin, just ignore the messages, okay? Just for our security's sake, okay? And we are also looking into the matter. We've removed them from the group, but we noticed that they are using our profile picture to message people. Please ignore them once you notice that they are not an admin with PU Prime, and none of the admin in PU Prime has a foreign number. Okay, thank you very much. Shahab, someone wants to say something. I think Jojo wants to say something. Yes, they form every time. So it's just like it's telling you a story. Every candlestick is telling you story of each time frame. Okay, every candlestick is telling you story of each time frame. So that's just it.
Hello, sir.
Okay, Mr. Ifyok, yes, ask your question.
On
Like
the
I
YouTube,
said, I'm coming. It's just unfortunate that the market has closed at the moment. Okay, so how do you identify opening candle or closed candle? Opening candle is it's just easy to identify. I'm coming out to check BTC. If BTC is open, then I will use 1 minute example to teach us opening candle and close candle. Just a moment. No, it's not open. Oh, it's BTC Euro. Just a moment, please. No, it's not open at the moment. So, it's not open on my chart here. It's not open on my chart here. That's what I'm trying to say. Okay, so you can just open your chart, put it on 1 minute time frame. Every explanation will be clear to you. Okay, Mr. Simon, just open your chart, 1 minute time frame. Every explanation will be clear to you. But it's just that once it's 1 minute or every time frame. So if you're on 5 minutes, the last 5 minutes, the last price that the 5 minute closes is also equals to the last price that the 5 minutes open. Okay, so you can just say the close of the previous candle time frame is equal to the open of the new time frame. Okay, then close is at the end. So after 5 minutes, if you're on the 5 minute time frame, after 5 minutes, the last price which the price hits is called the close. Okay, it could be up or it could be down. Okay, I think I've answered that. Okay, any other questions?
So please explain more on piercing top.
Yeah,
Piercing top, piercing top. Please explain more on it.
piercing top. Hello?
Yeah, Pearson top.
I didn't think I explained piercing top. Okay, so I didn't talk about piercing top.
That was not mentioned in the class.
So I didn't explain about piercing top, please. Okay, so in the absence of that, thank you very much, everybody. Have a wonderful evening. The market starts 10 p.m. tonight. By tomorrow morning, PU Prime organizes analysis. We do analysis every morning and afternoon to give us market insight. And we also give you signals as well, trading signals that will help you in the trade. So if you love this session, kindly drop a fire emoji. And also, you can also join our copy trade system. Please allow your account manager to to recommend traders for you so that you can also know who to copy, and don't just jump into the market at the moment because you are still learning. You need to attend our classes. And also, if you are in Lagos, you can join us on our physical office on Tuesdays and Thursdays and Saturday at number 54B Adeniyi Jones, okay, Ikeja. The name of the building is called Agos Plaza. And if you are in Abuja here, we are at number 50 Ebitu Kiwe Street, Work and Connect Building, Shabi. Okay, so thank you very much for your time. You can watch this on YouTube, PU Prime Africa. Watch the classes. This class session is going to end on the 15th of September. So we still have a lot of things to go. We have sessions to hold, and the sessions, online sessions, open as on Wednesday,
Hello,
Friday,
sir.
Sunday, 7 p.m. Then physical class
Hello, sir.
Tuesday, Thursday, and Saturdays. Okay, Vivian.
Hello. Good evening, sir.
Good
I hope
evening.
you will drop a link for us so that we have the recap of this program.
I don't understand.
Hello, can you hear me?
I can hear you.
So are you going to drop a link for us so that we watch it again, the recap of
Yes,
this
that's what I
class?
said. You can watch it on YouTube. It's on YouTube. Just type in Prime Africa. We upload it on YouTube.
And because I didn't get Friday zone up to now, not gotten it.
Okay, it will be uploaded.
Okay.
Yeah, have a wonderful time, everybody. Good night.